Is the US economy heading for a recession? According to UBS, there is now a 93% probability of an economic downturn, a number that's historically worrying. But not everyone agrees. Bank of America says growth will stay positive and there's no need to panic. So what's really going on? UBS, on one of the world's top financial services firms, has released a new analysis that points to a 93% chance of recession based on recent hard data. But here's the key: UBS is not officially forecasting a recession yet. Instead, they believe the US is entering a period of very slow growth, what economists call stagnant growth. UBS uses a credit matrix-based model to measure recession risk. That risk has doubled to 41% since January 2025. They looked at economic indicators like personal income, consumption, industrial production, and employment. Let's break that down. Personal income and spending pretty stable so far this year. Despite fears, Trump's tariffs would raise his prices. Industrial production dropped by 0.1% in July, which is a small but negative sign, the biggest red flag. The August jobs report showed only 22,000 jobs added, way below the forecast of 75,000. And it's worse than June and July numbers were revised down by 21,000 jobs combined, with June actually turning negative. That's why UBS calls this historically worrying. Moody's chief economist Mark Zandi told Newsweek the economy is not in recession yet, but it feels like it's on the brink. He says negative payroll numbers are the biggest alarm bell. Arindrajit Dube, professor of economics at UMass Amherst, agrees the slowdown in hiring could reflect the start of a recession. Consumer confidence is also down. The Conference Board's confidence index dropped to 97.4 in August. The expectation index fell to 74.8, and any reading below 80 usually signals a recession is coming. So from labor market data to consumer sentiment, there are multiple warning signs. But not everyone is predicting doom. Bank of America CEO Brian has a much more positive take. He told CNBC the economy could still grow by 1% to 1.5% this year, no recession. Credit quality remains strong, meaning people can still borrow safely. Consumers are still spending, with July 2025 payments, cards, ATM, digital up 5% compared to July 2024. Unemployment is at 4.2%, which is below what most economists call full employment. The CEO says that means job growth might slow simply because there aren't enough workers left to hire, not because demand is weak. He also predicts no Federal Reserve rates cuts until 2026. Investors will watch closely for hints of policy changes at the Fed's December meeting. The next big economic data points Tuesday, annual revisions to non-farm payroll data. Thursday, inflation readings from the BLS. These will either confirm the slowdown or calm fears. If inflation remains stable and hiring improves, recession fear could ease. If not, we may see even more warnings from economists. So where does that leave US? UBS says there's a 93% chance of recession, but still no official call. Moody's and other economists warn the job market slowdown could be the tipping point. Bank of America stays optimistic, expecting slow but steady growth. For now, the message is watch the data closely. A single negative payroll number could mark the official start of a recession. But if consumers keep spending and inflation stays under control, the US might dodge a downturn. Whether the US economy heads into a recession or just a soft patch, the very few months will be critical. We'll keep tracking the job numbers, consumer confidence, and Fed decision to bring you updates. If you find this helpful, hit like and subscribe for more clear breakdowns of complex economic news.